Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning, this is Peter Lewis, welcoming you to Money Talk on Tuesday the 5th of September. This is the place to come for the latest business and finance news from China and around Asia, the original Money Talk. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. And thank you for making this program one of the most listened to financial podcasts in Hong Kong. In today's business and finance headlines, China's foreign ministry confirmed Monday that Premier Li Qiang will attend this week's Group of 20 summit in New Delhi in place of Xi Jinping. The foreign ministry didn't provide details as to why President Xi wasn't attending the event, a snub that's likely to aggravate strains with India. His absence would mark the first time he's missed a G20 summit since taking power. President Biden said he was disappointed that President Xi planned to skip the G20, but added that he was going to get to see him. However, Mr. Biden didn't say when exactly this meeting would happen. The Asian Business Summit begins in Jakarta today, bringing together more than 2,000 world leaders, CEOs and senior executives representing multinational and regional corporations. World leaders due to address the gathering of Pacific nations include Japanese Prime Minister Fumio Kishida, Philippine President Ferdinand Marcos Jr. and UK Prime Minister Rishi Sunak, who will give keynote remarks on Britain's foreign policy goals in the region. China's state planner, the National Development and Reform Commission, will set up a new bureau to oversee the development of the private economy as part of the government's push to boost the private sector. The Bureau will coordinate policy planning and implementation of private sector support. Its major functions include monitoring and analysing the private economy, coordinating the drafting of private sector support measures, and establishing a communication mechanism with private firms. However, unlike a party commission, the new Bureau won't have the authority to force other government agencies to implement its recommendations. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Mark Toe, Managing Director of Asset Management at the Fung Financial Group, and our US Economics Correspondent, writer and broadcaster Barry Wood. And if you want to get in touch, please go to my website, peterlewismoneytalk.substack.com, and take a look at my daily newsletter.
Peter Lewis's Money Talk.
US stock markets were closed Monday for the Labor Day holiday. US index futures rose marginally in thin holiday trading, with sentiment boosted by the latest Chinese property stimulus measures and hopes that interest rates are approaching a peak. Cash bond markets were also closed for trading, with Treasury futures slightly lower. The US dollar index was 0.1% lower after rising for 7 straight weeks, its longest such streak since 2018. The dollar strengthened 0.1% against the Chinese yuan to 7.2746 renminbi in onshore markets. The Japanese yen was 0.2% weaker at 146.44 against the dollar. Both Brent crude oil and US crude futures traded at new 9-month highs. Brent crude oil closed 0.5% higher at $89 per barrel. In Asian stock markets, Japan's Topix index was 1% firmer at a new 33-year high. Chinese stocks rose after more than a dozen large Chinese cities relaxed mortgage rules as parts of efforts to revive the country's paralysed property market. In addition, the People's Bank of China cut financial institutions' FX reserve requirement ratio by 2 percentage points to 4% from 6%, effective from September the 15th in the latest move by Beijing to combat a depreciation of the renminbi. Hong Kong stock market reopened after closing for the whole day Friday because of Super Typhoon Saola. On Monday, the Hang Seng Index surged 462 points, or 2.5%, to 18,844, the highest level since August the 11th. The Hang Seng Tech Index jumped 3% higher, and the Shanghai Composite Index rose 1.4% to 3,177. Chinese property developers rose sharply, with the Hang Seng Mainland Property Index up 8.2%, as megacities, including Beijing, eased mortgage requirements for some home buyers, and the nationwide minimum down payment was uniformly set at 20% for first-time buyers and 30% for second-time purchasers. Shares in Country Garden surged 14.6% after creditors agreed over the weekend to extend a maturing yuan bond, helping it to avoid default. Country Garden is still scheduled to pay $22 million in coupon payments on $2 bonds it missed in early August, and that grace period ends tomorrow. Futures markets are pointing to a decline of about 0.7% for the Hang Seng at the opens, which looks like it's going to open around 18,720. And you can get more details on the latest market movements in my daily newsletter. You'll find that at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Let's welcome our Tuesday morning guests. We have with us Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Morning, Mark.
Good morning, Peter.
And also another Mark with us, Mark Toe, Managing Director of Asset Management at the Fung Financial Group. Morning to you, Mark.
Good morning.
And over in Washington, D.C., as always at a Tuesday morning, US economics correspondent, writer and broadcaster Barry Wood. Good morning to you, Barry.
Good morning, Peter.
And I should wish you a happy Labour Day holiday as well. It's still the Labour Day there, isn't it, for you?
Yes, but the sun is setting, so it's nearly over.
Okay, great. Well, look, let's start in China. These new mortgage rules. China's cut down payments and mortgage rates. It's going to allow the largest cities to cut down payments for home buyers, and it's encouraging lenders to lower rates on existing mortgages. That helped give Chinese stocks a big boost yesterday. I tell you what, Mark Toe, do you want to give your thoughts on this? The market reacted very positively to it, didn't it? Do you think it's a game changer?
Yes, it did. I think the whole game changer basically lies in the confidence of the public, because the directive or the message, it has been very clear that the government or the authorities are going to have more measures no matter what, because they recognize that it is in such a difficult situation that they cannot maintain the previous, you may say, very conservative measures in concerning all the liabilities issues. Rather, they are now having more positive measures to, you may say, to pardon or to forget about these things for a moment, just because the situations seems to be so difficult that they have to intervene in just another direction, just like a pendulum swing.
Do you think as a result of this, people on the mainland will be more inclined to buy properties now?
Not yet. I think the public has to, just like in the past 40 years, the basic tenet for the Chinese authorities or for the people, they have to, they take a more, more preserve or more conserved attitude or approach. They wait and see, and they step on the stone, and one step at a time. They don't have that cold turkey mindset. They don't believe everything what the authorities are saying, but they believe in other people. As long as there are other people who come in first, and as long as the asset price tumble and rebound, as long as they have some kind of a self-fulfilling prophecy, the whole cycle may set in.
Mm-hmm. Mark, the other Mark Michelson, I mean, this has been a big issue for China's economy, hasn't it? The travails of the property sector and the damage it's done overall to the economy and to business sentiment. You've raised it several times, and I know your members have been very concerned about it. Do you think this eases those concerns?
Well, absolutely. Well, and I agree with Mark. I think in reaction to it, many Chinese will want to feel the stones when they cross the river as well. But what this does, I also think, is raises the stakes, including for the government and for people, because they'll have now expectations that the government will take measures going forward, other measures that will help the property sector, help stimulate the economy, and so on. But the Chinese government and government officials also have to worry about the implications of those measures, which is one of the reasons they've been sort of conservative, because there are costs that could be given if they take certain measures, and they aren't sure what the implications are. Mm-hmm. So I think that's one of the reasons they're being careful. It's pretty difficult. It's sort of a tightrope. And as Mark pointed out, confidence is really important. Mm. And I think it will be moving in the right direction, but but I think that applies to not only the economy, but it applies to the political situation as well. The COVID had a big effect on China as it did other economies, and there's still the impact of that is still affecting the economy and attitudes.
I suppose at the same time, the government doesn't want to reinflate the property bubble either, does it? Although I suppose that's the least of its concerns at the moment.
It probably is, but and they keep comparing China with Japan of 20 or 25 years ago. Maybe not completely fair, but of course they hear that as well. And it is a political situation, and everyone worries about public opinion. Even
Mark, you lived in Japan. Do you think there's a parallel between?
Not really. I mean, in some ways, but it was completely different economies. And frankly, the Chinese economy and Chinese policymakers, I think, are more flexible and more willing to try things and have more levers to push than their Japanese counterparts did many years ago.
Barry, when you look at this
from
overseas, I mean, Janet Yellen has specifically mentioned, hasn't he, concerns over the Chinese economy. President Biden described it, I think, as a basket case. So does this help in terms of sort of American concerns, because they don't want to see a weak Chinese economy?
Well, frankly, I don't know what the Americans want, and I don't know what the Chinese want. I do think that there must be some parallels either to Japan or the United States in 2007-8. I remember people coming back from China, American tourists, saying they'd been out in the West and they saw whole cities, all these skyscrapers, nobody in them. And they worried. I mean, that's been a long time now. But there's a problem here. And I think the Chinese have moved slower than any of the American authorities thought. And I will just say as an addendum, because I think Mark Toe has got it right, this is a psychological problem among the Chinese people. Their confidence is not going to be rebuilt until they see other people beginning to get back into the market. But there's clearly, I think, a notable cooling in the United States-Chinese relations, which were already cool. And I say that because when Miss Raimondo was on a Sunday morning talk show, she was much harsher in her assessment of China, saying the business community regards it as uninvestable, losing patience, all these things that she did not say in Shanghai or Beijing. And then when you add in that President Xi is not going to New Delhi, I mean, it seems to me that there's a lot of uncertainty that wasn't there a week ago.
Well, yeah, you would know better than I, Barry, but my feeling is that she probably got a few talks when she came back to Washington, because although she mentioned some of those issues when she was in China, you're right. Her appearance on Face the Nation and maybe other shows were definitely much more negative or less, certainly less promising than before. It looked pretty good for a while, and I think there are real concerns. I think going forward for companies, of course, the hope was that China was going to help take up the slack from slowing U.S. and European economies this year. Well, of course, the U.S. hasn't slowed that much. Europe is still an issue, but China hasn't done it. And one of our main topics has been managing uneven growth this year in 2023, and we thought that was going to be throughout Asia. But now a lot of it applies to China itself. So for companies, it's also an issue, obviously.
Well, as well as Gina Raimondo not holding back, China's State Security Ministry has lashed out as well. It's accused the US of mixing engagement and containment, it says, and it's also suggesting that a possible meeting between Xi Jinping and Joe Biden in November is at risk unless the US shows more sincerity. And that warning comes after Ms. Raimondo wrapped up her 4-day visit. The Ministry of State Security said in a statement on its official WeChat social media account, China will never relax its vigilance because of a few beautiful words from the United States. And the statement went on to say that the new approach from the US was old wine in new bottles, and accused the US of continuing to stir up trouble in the South China Sea and Tibet. It cited Washington's approval of arms sales and military financing to Taiwan as an example, and it criticized the US for what it says was openly bad-mouthing the the Chinese economy. That's after President Biden called it a ticking time bomb. Not a very good reaction, was it, Barry, really, either to Miss Raimondo's visit. I mean, she left hailing this as a big breakthrough, that there was a new engagement, if you like, in China-US relations through these working groups, these diplomatic talking groups, but it doesn't seem to be the case.
Well, I agree. And I think that that's why we're in a kind of uncertain period in which all of the risk seems to be on the downside. Yes, Miss Raimondo, I think Mark Michelson's got it right. There was no doubt a phone call from the White House and said, listen, take a hard line. And she did. And when you add up these things, I mean, the Chinese are cross about the American policy on Taiwan. Go back to the spy balloon. You can say about Tibet, all the focus on human rights that the Americans keep talking about. Then add to that the fact that you had 3 American high-level people in China, but nobody comes to the States. So, and now, President Xi not going to New Delhi. This is very interesting. If you look at, say, 2 weeks ago, Xi and Modi were talking in Johannesburg. Well, did they not talk about this? I mean, is this a surprise? Is this a health issue? We know nothing. Is this a slap at Modi, or is it a slap at the Americans, or both? So there's a lot of uncertainty that wasn't there.
I think that's really pretty important. I mean, symbolically, it's important that Xi Jinping's not going to New Delhi. You may remember last year, President Jokowi of Indonesia, who was the host then, managed to broker a compromise, and they even came up with a joint statement, which looks pretty unlikely this year, even on issues like climate change and other serious problems as well. And it's right; it might have implications for APEC, which is already shaky, partly because of the relationship with Hong Kong and other issues. So this containment versus engagement is a feeling, I think, that's pretty strong. And I think the Secretary Raimondo's visit, it looked like it maybe was going to ease that situation. It probably didn't. It probably gave at least China the impression that that's what's happening. Mm-hmm. You can argue on the other side as well, but certainly that's an issue.
Mark Toe, how do you see this from an investment perspective? Because on the one hand, we have this good news with China, the central authorities stepping in to try and help the property sector, also trying to support the renminbi, which is obviously positive. But then on the other side, you have these deteriorating US-China relations. We've had the comments today from China's spy agency and from Gina Raimondo as well in the US. How do you put this all together from an investment perspective and look at China?
Well, there may be waves or repercussions from time to time, but the overall situation differs significantly from the past 4 decades because in the best interest of the Chinese people, I think it is to go to do business with the every trading partner, the United States, the European countries, everyone. And don't argue with success. Actually, in the past 40 years, the Chinese success story basically stems from that. But I think it's quite a tragedy that it seems to be in a deadlock. I don't know. Once the mutual trust between the 2 biggest nations have lost, the whole thing has from the so-called positive sum game to very classic, you may say non-cooperative, the prisoner's dilemma. And because of the lack of trust or the asymmetry in information, you may say that somehow the Chinese may have to take precautionary measures, especially given the last president, the actions in restraining the free trade between China and the other countries. I think it is going to be a pendulum swing, and it's just on the way. And even though there may be some little improvements from time to time, it is very hard for the Chinese people and even the investors, the global investors, to change their view. They won't believe that everything will be back to normal, because the normal has changed. We have the new normal. The new normal is that we have more than competitive. It is non-cooperative situation, and I think that kind of mindset it will not be easy to change.
You said China may have to take some preventative measures. What sort of preventative measures are you thinking about?
Yeah, actually, in the past decade or so, you can see that somehow from the investors' point of view, somehow it is hard to understand, for example, why should the Chinese authorities shut down the whole educational sector, the private educational sector, in one night. I think it is just because of these regulatory constraints that the message, or you may say the whole atmosphere, has changed a lot. The uncertainties isn't going to be lifted anytime soon, I think.
Yeah, and it's not just education. I mean, we know about tech. It's also pharmaceutical industry. Yeah. This isn't against the international necessarily. It's just against the sectors for some of it's involving corruption and so on. But saying that, I'm going with a business delegation to the GBA, Greater Bay Area, on Thursday and Friday. I think we're going to have a pretty positive experience, and they're still very interested. So executives based in this part of the world, including in Hong Kong, still have some positive views of China and prospects going forward, despite these challenges. They know that.
Mark, I think you're going to get an earful. This is going to be very interesting indeed. What you learned from that session. Listen, if I could just focus a little bit more on this G20 business. You know, the recent history is significant. Don't forget, Xi Jinping was the host of the G20 in 2016. Yes. So not only was he with the Indian Prime Minister 2 weeks ago, but the G20 is a group that China greatly values. When it was set up by the French, there was an urgent mission to Washington by then President Sarkozy and the European Union Commission president in 2008, when it looked like the world financial system was collapsing, saying, President Bush the younger, do something. You need to have a meeting. Thus, the G20 happened almost with 2 weeks' notice. They couldn't even get name tags ready. That was held in Washington in 2008. Then there were 2 sessions in 2009. The interesting thing about that, Peter, is that China was a very active player in a coordinated stimulus program that the G20 nations agreed to prevent a global recession. It's a triumph, really. Larry Summers, the former American Treasury Secretary, says this was the most important international meeting in years. Now you've got Delhi. I mean, you know, let's face it, we know that India and China vie for leadership in the developing world, but it's a stiff arm to the Indians who've been planning this. You know, they want to show off their moonshot, they want to do everything, and the Chinese aren't going to be there. I don't understand this.
I teach this as well, and I agree completely with Barry. I actually think the highlight of G20 was in 2010, the meeting in Seoul, which was after the global financial crisis, but where they really were working together. And China, as Barry said, was a major player. This has been an important, although doesn't have any enforcement powers, doesn't have a secretariat, but very important for moving forward on a lot of issues. And when they're not meeting together effectively, especially when a major leader or two doesn't show up, and of course the U.S. has done this in the past for mostly internal reasons, that's an issue, and Barry, I think, has it right.
And this is a particular snub for India, isn't it, and for Narendra Modi, and it's been taken that way as well. If you read the Indian media, they are talking about it in that light. It's a snub, and even some commentators saying President Xi is doing this deliberately to sabotage the G20 meetings because it doesn't want India to look too good. So it's not great, is it, really, for India-China relations? Or
for BRICS, I'd mention as well, since India and China are the two dominant members of BRICS, and they just had a major meeting where a lot of positive things were said. But those are the two leaders, and they don't particularly like each other, as you probably can see.
Mark Toad, give me your thoughts on where you think the Chinese economy is. We had all the PMI data last week, didn't we? Which surprised a few people. It looked better than expected. We've got more data coming today, the China Caixin Services PMI. We've got trade data later this week and also Chinese inflation data as well. So we're going to have by the end of this week a better picture maybe of where the Chinese economy is at. What are your thoughts? Do you think maybe people have been a bit too pessimistic about China? Because the data certainly seems to show that things are improving a bit.
Well, of course, we have to differentiate between the really long-term developments from the short-term, rather foreseeable future. Because there may be waves and repercussions, as I have said. And for investors, I think it is most important to remember that the events, the causes of events have already been priced in. And everything, we take it to the market, and the market forces basically review all the information very quickly. So despite the pessimism of the people, whether they are investors or just the public or the authorities, I think the overall situation actually has already been reflected in the prices. And as long as we have some cheap prices, we may have opportunities here and there. And I tend to agree that, from Greater Bay Area or the other initiatives, I think from time to time there will be more policy directive or the rather positive measures for the investors to boost their confidence, to help them get that feedback on the ground. I think the overall situation is improving, at least for the very short term, given the lower valuation, much lower valuations from the previous years.
Okay. Barry, can I talk a little bit with you about the US economy? Because we had those jobs figures on Friday. The US economy added 187,000 jobs in August. That exceeded market expectations, but there was a cumulative 110,000 downward revision to the prior 2 months of payrolls. The jobless rate rose to 3.8%. That's because the labour participation rates rose, which means more people were rejoining the workforce. Average hourly earnings rose less than expected by about 0.2%. I think, Barry, if the Fed could have written a jobs report beforehand, it would have looked pretty similar to this, wouldn't it? I think they must be delighted with this.
I think you're right. Absolutely. Look, the interest rate is the most important price in capitalism. So the interest rate has been rising rapidly during the course of 2022 and even into 2023. And yet the economy has not gone into the tipper, which is good news. We're even creating jobs, as you just mentioned. Unemployment rate is at 30-year low. So at some point, the lag in monetary policy has to have an impact. And what has the chairman of the central bank tried to do? He wants to restrain growth. He wants to have slower growth so that the inflation rate comes down. And the inflation rate is down by 2/3. So, I don't know. It looks very good, Peter. I think you're right. I think he would look at these data and say, my goodness, I couldn't have imagined it could be this good. And yet, we mustn't forget that there's a lag. And when you've got a doubling of mortgage interest rates, meaning that if you were paying $1,900 a month to buy a house in a mortgage, now you're paying $2,900. That's going to slow the economy. And the housing sector so far has held up. But how much longer will that go on?
And what does the Fed do now? Should it pause?
Oh, I think it has to. Look, I mean, at some point, he can only imagine, the members of the FOMC can only imagine what the members of Congress, let alone the public, will be saying if there's a dramatic slowdown. They say, you guys went too far. So there's no risk in waiting another month. Wait for some more data.
Mark, how do you see this? I mean, it's looking pretty good, isn't it? But certainly the thing that's kept the American economy afloat and stopped it sliding into recession has been the jobs market. But it does look like now, if you look at the data, the jobs market is starting to cool. So does that raise risks of a recession further down the line?
Yeah, I mean, I think it does. And I think I agree basically with what Barry said. I mean, we never know. Our forecasts for China, we were a little ahead of the pack in suggesting that Chinese growth this year wouldn't be nearly as strong as been predicted by the IMF and others. We really missed the U.S. You're thinking it was going to be so substantially weaker, and it keeps defying expectations. That's the good news. The bad news, especially for the Biden administration, is many voters don't seem to give any credit to the Biden administration for any of this. So that's an issue. So you know what he did, and I think Barry saw this overnight. He blamed the Trump administration for giving up business to China. So China came into it again. So there it is.
Mark Toe,
right in the middle of the political campaign.
Mark Toe, let me give the final word to you. I mean, the two big surprises this year, really, haven't there, in the global economy has been, first of all, the underperformance of China. People were so optimistic at the beginning of the year about how China would perform after COVID restrictions were lifted. And the other big surprise has been the outperformance of the American economy. If you go back to the beginning of the year, so many people were predicting a recession this year. But where are things going to go from here, do you think?
Yeah, the so-called pent-up demand for China after the COVID pandemic didn't live up to expectations. I think it is just normal. And actually, if we pay close attention to the situation, we know that it is not going to be easy because the whole you may say the whole situation has changed from the past 4 decades. I think it takes a long time to find the new equilibrium. But for the United States, I think for the global markets, I mean, the situation is rather interesting because you can see that the Fed is trying to steer the wheel to try to have that kind of a so-called soft landing, to have the Goldilocks. But this kind of equilibrium is rather unstable. It is so fragile that any change, any small change in the parameters may lead to big changes in the whole game. So I would rather add some grain of salt in the rhetoric, and I think that it is not entirely impossible for recession to set in by the end of this year or the beginning of next year, because it is really possible that the central bank may have overdone something in the courses of events.
Okay, well, thank you for your thoughts there. You heard Mark Toe, who's Managing Director of Asset Management at the Fung Financial Group, Mark Michelson, who's Chairman of the Asia CEO Forum at IMA Asia, and Barry Wood, our US Economics Correspondent over in Washington, D.C. Thank you for listening to Money Talk this morning. You can find more business and finance information from around Asia in my daily newsletter, which is at peterlewismoneytalk.substack.com. On tomorrow's programme, I'm joined by Louisa Fock, China Equity Strategist at Bank of Singapore, and Sean DeBose, CIO at Interlink Asia Pacific. And with a view from Japan is Nick Smith, Japan Strategist at CLSA. Have a good Tuesday.
Money Talk